Hey, good morning. This is Warren Redlick. I wanted to talk about this morning's news that Tesla is raising an additional $5 billion in cash by issuing new shares in the company. There's two sides to this. I don't really like the dilution. Tesla issuing more shares means if you have shares now, you now own a little bit less of the company. The other side of it is by raising more cash, if they use it the way they say they're going to use it, it means that the company will grow faster and you will achieve the growth you are hoping for sooner. So the stock, on the one hand, is worth less because you own less of the company, but on the other hand, the stock is worth more because the company grows faster, and that means your shares are worth more in the long run. Before we get there, I want to thank Bradford Ferguson of Halter Ferguson Financial and all my Patreon supporters for helping this channel grow. Keep in mind, this is not professional investment advice. This is just my opinion. Are you ready? Let's go. I want to talk about the positive side of this first. The idea is that this additional capital raise, the money coming into the company by selling shares, is going to be used to increase the factory building. And you can see it in this. This is from Bloomberg, that has helped Tesla more than double planned spending on plants and equipment this year. And this new capital raise will help double the car maker's planned capital spending over the next 2 years. So basically what this means is Tesla will build more factories faster. We see that Berlin is going up. We see that Giga Austin is going up. We see that Shanghai is expanding. Giga Berlin, Giga Austin, Giga Shanghai. Tesla's capital expenditures help Tesla increase output, increase growth, build the company quicker. And there are investments that we don't necessarily see. It may be that this is helping them acquire new employees, hire new employees who will help the company grow faster. It may relate to developing lithium clays into lithium out of the lithium clay deposits they acquired in Nevada. It may relate to other investments like in nickel mining capacity or paying in advance to nickel miners to deliver nickel to the company so that they can produce more batteries. It could be going into increasing the progress in the high nickel 4680 cell lines so they're able to produce those batteries quicker. It may mean the Cybertruck factory is built quicker. We don't necessarily know how the increased capital spending will play out and how it will grow things. From what Bloomberg said, the expectation is that the money being raised is going to be spent on building new factories or otherwise developing the company's growth quicker. This matters a lot. If you're looking at your timeline, like I tend to project out in my videos, okay, this is where I think Tesla's going to be in 2030. And if I think Tesla's going to produce 20 million cars in 2030, that leads to a conclusion about what the share price is in 2030. And then you backtrack that back, which I'm going to be doing a video shortly about this. You say, well, if I was going to invest $10,000 today, how much would it be worth in 10 years? And if you invested a normal type of investment at 10%, it would be worth $25,000. You expect it to grow about 250% over a 10-year span. You backtrack that and you say, okay, I think Tesla's going to be worth $10,000 in 2030. Then today, Tesla's stock is worth $4,000, which is huge, right? Because right now Tesla's trading around $600. I want to just talk about valuing Tesla today based on the future. So if you think in 2030, Tesla will sell 20 million cars, and that translates to a share price of $10,000 a share. Now, I'm making up the numbers. Don't get me wrong. I'm making up these numbers. I think it's in the ballpark of correct, but I'm making up numbers and I'm using $10,000 because it's a really convenient number to divide by or multiply by. If you take a step back and you say, well, if I made a normal investment portfolio and I figured I was going to earn 10% a year, over 10 years, that would increase by a factor of about 2.6. And if you take that 2.6 and you say, okay, I think I'm going to have $10,000 of Tesla 10 years from now, what is that worth today? You divide 10,000 by 2.6 and you get a little under $4,000 a share because 4,000 times 2.5 is 10,000. If Tesla's increased capital expenditure moves up the date from 2030 to 2029. They build factories faster. They build more factories faster so they achieve 20 million vehicles a year early. Then you go from 1.1 to the 10th power equals about 2.6 to 1.1 to the ninth power equals about 2.35, and you divide the 10,000 by 2.35 instead of by 2.6, and you get over $4,200 a share today. That's some complicated math. The point is that by accelerating the growth, today's Tesla will be worth more faster, and the investment you make today is worth more. So you trade this off, you've gone from about $3,900 a share to $4,200 a share in what you think the value is now based on that $10,000 in the future, and you've lost 0.8% dilution. So you take that $4,200 and you take out 1%, ballpark 1%, and you lose $42. Well, you're still way ahead. So that's the math behind it, is if, this is the big if the money being raised goes into building more factories faster, and it means 20 million cars happen sooner, if it means the robo-taxi development increases in speed, if it means Tesla is able to get more battery supply quicker, whatever it is that Tesla needs to accelerate that growth, to move forward the 20 million, 20 million is arbitrary, but to move forward the growth so it happens sooner. If that's what this enables Tesla to do, it's great. The fear is that the money just sits on Tesla's balance sheet, which makes the company looks better to Wall Street investors, but doesn't accelerate growth. So I believe that this is going to be used to accelerate growth. And here's the thing. The CEO of the company, you may have heard of him, his name is Elon Musk. Elon Musk owns 20% of the company, roughly. And he's got these option packages coming in, which further increase his holding of the company. It dilutes us a little bit. That's another dilution that we don't like. If Elon gets another 2% of the company through these option packages, that means we're losing 2% of the value of our shares in terms of how much of the company we own. But that's a trade-off we made, that Elon is getting compensated for all the work he's doing for us and growing the company. The point is that no one is more invested in Tesla than Elon Musk. And Elon Musk is making the decision, let's go ahead and do a capital raise. If Elon's goal is to make his shares worth more, if Elon's goal is to grow the company, then he has a good reason for doing the capital raise. Capital raise wouldn't happen if Elon wasn't on board with it. So Elon's probably on board with it. I have a feeling that there are other people saying, hey, this is a really good time to do a capital raise. Zach Kirkhorn, maybe. Maybe Larry Ellison. Larry Ellison, by the way, is another Tesla board member who owns about 1% of the company, so he's diluted by this too. So there's some key players in the company who are making the decision, yes, this is the right thing to do. I don't think they would do it just to hold cash on the balance sheet. We'll see. The other side of this coin is, well, Tesla's already generating cash. They're already generating enough cash to be able to accomplish what they need to accomplish. We don't know. There's stuff going on inside the company. There's risk factors that they see that we don't see. But my gut hunch is this is going to accelerate growth, and that is going to help Tesla grow faster, and it's going to make our shares worth more in the future sooner, and that makes our shares worth more now. Check out my video on why Tesla is going to be worth a lot more than $10,000 a share in 2030. Check out my video of why I don't like short-term trading strategies. Check out the merch. Elon Fan Club t-shirt, Patreon links all in the description below. Please like, subscribe, share with your friends, and thank you for watching.